Hello guys, I discovered the easiest way to becoming profitable using Binance Futures Trading Strategies. I'm going to break it down sequentially for you. If you're a newbie, a veteran in this game, pay little attention. This can change the entire narrative for you. Now, I believe one of the major challenges that a lot of traders usually face is knowing the direction of the market, right? Knowing the direction of the market. Now, I often say that the market moves in two sequence, right? Market moves in two sequence, meaning it seeks to sweep out old lows and highs, and of course, it tends to rebalance itself using fair value gaps, using order blocks, using internal range liquidity. So if you are not actually familiar with these terms, don't worry. The description of the video, there's a link to a video that would guide you and teach you more about internal range liquidity, external range liquidity, and how price moves. So right here, how do you know when the market is bullish and when the market is bearish? Very simple. Go to your daily time frame. For a bearish scenario, you want to see price do this. You want to see price break structure, right? You want to see price come back to this inducement, create a fake move, go up, and then dump all the way down. This is what you want to see on the daily time frame. Now, you can see this same schematic here is playing out right in front of you on the daily time frame now. Let's do this together. Look at this. We have a breakout structure. We have an inducement. Price goes back, taps into the order block. You can see the massive move down. Then it breaks structure again. Can you see? We have broken structure. We have broken structure. Broken structure as it is right now. All right. So if you see this pattern happening on the daily, it means that you only look for sales. You have no business buying into this market or buying into this asset, coin, token, or whatever it is. All you have to do is just come towards the 4-hour time frame now and map out where you have fair value gaps, because price will go there. That is what price will do. Price will definitely want to go there. So we have a large fair value gap here. We have one here. These are reversal points. We have some here. Just map them out and wait for price to get back into that range. We have another one here. Inefficiencies. We have another one here. You see how trading is? It's so simple. So you don't need to complicate things. We have another one here. Right? Areas on your chart that price will likely come back to. So we now have a sequence now. We've actually identified the structure, the direction from the daily. 4 hours, we've been able to map out areas that price may likely react from. So what do we want to do next right here? We want to go back to the 1 hour to see if we are in line with what we just did. Now, are we in line? We can refine this as well. We can also refine this. Now, for your entry, right, we've covered all the areas that price may likely react from. Now, for the entry is very simple and direct. Now, as price reacted from any of them, yes, price has reacted from here. So we now scale down to 15 minutes to see the particular chart patterns or whatever it is that we're looking for. Now, scale down to 5 minutes. We want to see this same schematic that we saw on the daily time frame. We want to see it there. So let's see. Let me draw it out again. So This is a sell scenario. It's reacting. Boom. So are we seeing something like this? Let's go to 5 minutes. I think the 5 minutes will give us clearer picture. Okay. What are we seeing? Are we seeing this? Are we seeing this pattern? Are we seeing it here? It has not occurred yet. So I'm not going to be selling this trade. Let's look at it very well. Oh, great. I think it has happened already. So what price did? Created an inducement to trick traders into selling prematurely, right? And then look at what price has done now. It's tapped straight here into what? Tapped into, look at it here. Can you see this? So we'll call this our inducement. An inducement is basically an area on your chart that deceives traders into going into a trade early, too early. So you can see how price just did this inside our POI, inside the fair value gap in the 4-hour time frame. Price did this. This schematic, it brought it out for us. Can you see? Price has tapped into supply level here. And then it has formed, it has come down again. It did not stop there. It broke structure again, left inducement 2 times. Can you see it? And then it filled fair value gap again. Came back to fill fair value gap. So the market only does 2 things. It sweeps lows and highs, and then it rebalances itself using internal range liquidity. There's a video for that. You can actually check that out yourself. Description of this video. So guys, I'm selling already. So let's see what our risk to reward will look like. We're going to sell from here. Put your stop right above and drive price all the way down. Just drive price all the way down. That's some sweet 1 to 3. So $50 on this is basically going to give us $50 on this is 150. $5 on this is 15. 200 on this is 600. 1K on this is 3K. 10K on this is 30K. 100K on this is 300K. Basically, that's just how it goes. All right, so guys, this is it, how to frame your bias. I'll be dropping more videos on this, and do well to subscribe, hit the like button, share this video with your friends. For mentorship and signals, check the description of the video. Every detail is going to be there. Have fun, enjoy yourself, stay good, stay great, keep trading.